Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So gold market is strongly resisting to external pressure. It's coming from the sell-off on the stock market. We should understand the main thing here, that this recent retracement that we are getting, it's not because of the gold problems, not because of the gold's some weakness or something. This is purely technical moment. I already talked about this during this drop, and I repeat with this one again. So that sell-off is just because of massive drop of the stock market. Investors need cash to plug the holes in the margins, and then we'll start selling anything that they have just to fill the margins to initial level. You could easily check this. So if you take a look, for example, on S&P, what's going on here. Last time we talked about the S&P, it was in this candle. Now you can see what has happened just in the 2 weeks. This drop, it's approximately around 5% for this period. Is really significant for any stock market. And this is one factor. At the same time, gold feels absolutely well from the fundamental point of view, because the policy of Donald Trump is this tariffs uncertainty, some recent statement concerning Bitcoin, concerning stock market. It pushes the United States economy closer to recession. Why he is doing it, it's difficult to say. So some traders suggest that he does it intentionally to force the Federal Reserve start cutting rate when recession will be really close. They will have no choice but start cutting the rate. So maybe this is the major purpose. And low rates is always a supportive factor for national economy, national domestic industrial sector. That might be the reason. I do not know. This explanation has the logic, but the overall situation, I suppose, more complex than just this suggestion. Whatever it is, more signs of the recession coming, and that supports the gold. And that's why when the pressure from the sell-off is becoming weaker, it's immediately changed the direction. That leads to high volatility. So this rebound will be until the next time when the stock market will drop again. To see this process with a larger scale, so brighter, you could take a look at what's going on Bitcoin. Bitcoin is more risky than investors are selling with the more desire than the gold. And it's just totally collapsed already somewhere below the 80 even area. So, and that makes me just be patient and keep watching for the bullish signs around it, because I think that it's not, the bullish scenario is not done yet here. On the daily chart, at least, it starts forming kind of the flag consolidation, so it's potentially bullish. On the 4-hour time frame chart, let's take a look what has happened. The grabber that we have mentioned worked perfect. Market dropped below the lows, taking out of these lows. But take a look for now. It's showing immediate upward reversal. It's very important. It's a really great situation, because normally the bearish market, once it gets the major breakout, it should accelerate down and increase the success. But here we have the sharp reversal. It starts looking like kind of the maybe even wash and rinse or something. But this is absolutely typical performance when the sell-off is triggered by some the moment of the liquidity deficit or something of this kind. Because it comes as fast as it goes. Investors just sold some gold, get the cash, and sell-off immediately stops. This is not the ongoing normal process that have some development in time. So it's we could even say that it's kind of the occasional moment. Besides, here market holds really nice the previous lows. If you remember, we are watching for a big hand shoulders pattern here. Left shoulder, right shoulder. Market dropped here out of this consolidation, but it stands still above the confluence. So confluence area has not been broken. That's why I said yesterday that for the bears there'll be a bit more problems. So if you use stop sell order, yes, you could get some success here, but it was not for too long. And confluence area holds price and market return as a backup. So you can see market is returning back inside of the consolidation. This is potentially bullish sign. Shape of the hand shorts has not been broken. So these lows greatly corresponds to this one. Very similar level. Market returns back in a rectangle, so which is also open the road to possible action back to the top. And I call you to be a bit patient. For example, what we could wait for. We could wait for, it might be hand shoulders here as well, with a minor scale. Why not? It's really probable. Because market shows really great resistance to the pressure. It could be seen even with the performance that you see here. And I think that's a bit early to speak about downside reversal and the bearish situation on the gold. If market will not be able to stay in this range and will drop the confidence, start falling back to the 2870 area, that probably might be the capitulation. But for now, I wouldn't say that everything is done with a bullish context. So what I actually think about is that we could wait, for example, first market return back to the neckline, or you could call this just resistance here, and trying to jump in on the same level, on the same retracement as we did here in last week. But after market will show this upper direction. So we need to get some shape of the hand shorts before stepping in. That's one of the possible ideas here. And just keep watching and monitor the performance of the gold in general. So what's really going on here.